A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to talk about retail ETFs here with our ETF Research Director, Nina Mishra. Retail stocks doing well here lately.
Yes, retail stocks are doing well this year after so many years of underperformance.
Yeah.
And we know that retail sales are rising. In fact, retail sales for the month of May saw their highest increase in 6 months. And consumer confidence is also improving. And we know the reasons. Economy is improving, labor market is tightening, and with tax cuts and rising wages, Americans are willing to spend more now.
Yep.
And in fact, shares of traditional retailers like Macy's, Dillard's, Abercrombie and Fitch, they have done better than Amazon this year. These shares were, they were beaten down due to the Amazon effect for the past 4 years or so. But this year, while Amazon is up 50%, some of these shares have done even better than Amazon. So that is why retail ETFs have done pretty well this year. And today we are discussing 3 more most popular ETF in this space. And these three follow very different strategies. So I thought it would be important for investors to understand the important features of these ETFs.
Sure, might as well know all of the ones that are out there that are worth knowing about anyway. So the first one is the Spider S&P Retail ETF XRT, the ticker.
Yes, so this is the most popular ETF in this space. It has more than 500 million in assets under management, very reasonable expense ratio of 35 basis points. And what is important to understand is that it's an equally weighted ETF. And you can go to the code page of XRT on Zacks.com, and from there you can also go to the sponsors homepage for the ETF, and you can look at the overview. You can also look at the holdings, and you can see that it has a lot of familiar names like Netflix, Rite Aid, Wayfair, Overstock, but they are all held in almost equal weight. So that is why single company risk is largely eliminated in this ETF. It is up more than 10% this year.
Wow. All right. Amplify online retail ETF. Ticker symbol is BUY. This just specializes.
Yes.
Oh, IBUY. That's right. I didn't see that. IBUY. So specializing just in the online retailers?
Yes. As the name suggests, and you said, it holds online retailers, companies that derive more than 70% of their revenues from internet or virtual sales. It holds U.S. as well as global internet companies, internet retailers. U.S. stocks get about 75% weight, and international stocks get about 25% weight. And within those two geographic buckets, the U.S. and international shares are holdings are equally weighted. It is a little bit more expensive for this specialized strategies, charges 65 basis points, but it has done very well, in fact, for the past couple years. And this year it is up more than 27%. And again, you can look at the holdings and other details for the ETF. You will see that companies like Carvana, TripAdvisor, Wayfair, Etsy, Lensen, they are among the top holdings, and they are equally weighted within their bucket.
Okay, and then there's the VanEck Vectors Retail ETF.
The ticker is RTH. This is a market cap weighted ETF. It holds the 25 largest U.S. retailers. Expense ratio again is reasonable at 35 basis points, and it is up a little more than 11% this year. Now again, if you go to the website for this fund, and you can look at the holdings, and as I mentioned, it is market cap weighted. So since Amazon is the biggest player in this space,
Sure.
The fund's fortunes are tied to the performance of Amazon shares. Amazon has a 21% weight in the ETF. Then Home Depot and Walmart also have substantial weightings. And we know that Amazon has done really well this year, Home Depot too. Walmart hasn't done so well. So Walmart did hurt the performance a little bit. But this ETF has been doing well for the past couple years, mainly because of its high allocation to Amazon. And it is, as I mentioned, it is up a little more than 11% this year.
So before we do the comparison, the Supreme Court today ruled that consumers must pay sales tax now for online purchases.
Online retails sales too.
Yeah. Is on the surface, is this a plus for the retailers, or is this going to take a chunk out of their earnings?
Maybe a little bit. It will slightly impact online retailers like Amazon and others, which derive a lot of their sales from internet, online, or virtual sales. But Amazon has so many platforms.
Yes.
It's not only a retailer now, so I'm not sure whether Amazon shares will be much impacted by that ruling.
Yeah. All right, good point. So how do these examples that you brought stack up with the broad market?
So I have the comparative performance of the 3 ETFs that we discussed with the broader market, S&P 500 ETF, which is up just about 3% this year. And as I mentioned, IBUY is the best performer with a gain of about 27%, in fact, more than 27%. The market cap weighted ETF, RTH, is up more than 11%. And the other equal weighted ETF, XRD, is up a little more than 10% this year.
Okay. Do you own any of them?
In fact, I own 2 of them. I own IBUY and RTH in the ETF investor portfolio that I manage.
Okay. Well, thanks for the information. Don't forget, there is more ETF information on our website, Zacks.com. Use the Funds tab in the top toolbar. It'll help guide you to that section of our website. And also, don't forget about the podcasts on our podcast page. Nina does an ETF podcast that you may want to check out. It's a weekly event on that page. It gets updated with a new episode each week, so you may want to keep your eyes out for that and other podcasts of interest. With Nina, I'm Terry Ruffalo.